AMD and NVIDIA both gave you a 2x return in 2023. NVIDIA doubled your money again, giving you a 4x return from 2023 to today, where AMD has only given you a 2x return. Basically, AMD has had no price movement in 2024. So a lot of people are wondering, is this a buying opportunity or something that they should skip? Well, in this video, we're going to attempt to answer that question and kind of give you the full technical analysis, and I'm going to explain my thesis if you stick around to the end of the video. But before I get started, please hit that like and subscribe button. It really helps the channel grow. With that being said, let's get started. These are AMD's current metrics. For us to get a price target for 2030, we need to research and find out what these variables will be by 2030. This will tell us what we can expect stock price to be. Its revenue growth has been nothing short of astounding. It was making $6 billion 5 years ago to today making $24 billion. You really start seeing an issue at the start of 2023 when it had its first ever revenue decline. Ever since then, it has had a very measly uprise. At the start of 2023, it had $23 billion in revenue to today having $24 billion. That's over a $1 billion increase in revenue in 2 years. This actually explains its plateauing of the stock price, but this doesn't explain the jump it had in 2023. I think this was more speculation than based off of fundamentals. Next, we're going to do some research and see what are analysts projecting AMD's revenue to be by 2030. The first article by Yahoo Finance is saying we can expect $65 billion by 2027. I don't believe that because currently it's making 26 billion. It's not going to have a 3x jump in 2 years. It just doesn't have that compelling of a product. So for me, that is not a compromisable source. It's going to have 90 billion in revenue by 2030. I'm not going to lie, that's a bit more reasonable. So from the thesis I'm getting, everybody's projecting 60 to 80 billion in revenue for AMD by 2030. I'm going to be on more of the little bit of the conservative side and say it's going to be 60 billion revenue, which means it will have a compound increase of 20% every year for the next 5 years, which would mean it would increase its revenue by almost 150%. That means it will have $60 billion in revenue over the next 5 years. Next, we need to understand the number of outstanding shares and what this company has been doing for the last 5 years on this front. Has it been increasing our value by buying back shares, or has it been diluting our position by printing more shares? And if you take a look at this chart, AMD has been diluting our position by printing more shares. It had 1.1 billion shares 5 years ago to today having 1.6 billion shares. That means it has diluted our position by almost 30% over the past 5 years. Now, I will be honest, this is not a big deal because its revenue jumps, its dilution. It literally 3x'd its revenue and only diluted our position by 30%. I'm actually okay with it. Matter of fact, I prefer it if you can give me such an exponential jump in revenue. But we can see that it is indeed slowing down the number of dilutions it's doing, but it hasn't completely stopped yet. So our expectations for the future will be a dilution in our position going into 2030. So to be a little bit on the aggressive side, I'm going to say it will dilute our position by 7% over the next 5 years. So we can expect 7% more shares to be printed over the next 5 years. Next, we're going to talk about the margin of profit. Let's be honest, this is quite embarrassing. 7% margin of profit. And if you take a look at its direct competitors, the company that it's always compared to, it's even more sadder. NVIDIA has a 55% margin of profit where AMD has 7%. Now, I'll be honest with you guys. Neither of these companies are going to maintain this margin of profit. Personally, AMD is spending a lot of money to catch up to NVIDIA, and NVIDIA is going to shrink that margin of profit once it has actual competition. Right now, there is no competition, so NVIDIA is just charging whatever they feel like, and its customers are paying it. So I expect this number to jump. How much do I expect this number to jump? Quite honestly, I think it can do 24 very easily. But before we plug that number in, let's take a guess on its PE. Easy going to achieve a 30 PE if you can increase your revenue by 150% over 5 years, yeah, people are going to pay an easy 30 PE for your stock. It could even go higher. It could even be 37, 38, 24 for margin of profit. Again, I believe that NVIDIA's margin of profit is going to shrink to 37, 38. AMD's is going to increase to 24, 25. I still think NVIDIA will be the to-go choice in the future versus AMD, but for now we're just analyzing NVIDIA. Once we plug all these numbers in, we get a market cap of $430 billion, which will give us a stock price of $248, which means you will indeed get a 2x almost a 2x return. For you to actually get a 2x return, you need to buy this company at $124.33. But you're very close to the 2x return that we aim for when buying a company. Now, so from the technical analysis and thesis variable manipulation based off of historic facts, you can expect this company to have a stock price of $248 if, and I only mean if, it can have $60 billion in revenue by 2030. Now, personally for me, if my only thesis on investing in this company was AI chips, I wouldn't invest in it. Here's the truth. Nobody's going to choose AMD over NVIDIA. Everybody's first choice is NVIDIA. Even AMD's own CEO says that we can be an alternative, not a competitor, but an alternative. That's not a good look. Number two, the biggest moat that NVIDIA has isn't chips, it's their software. And what's their software? It's the CUDA software, where it can actually improve your capacity of your LLMs. Almost the entire AI ecosystem right now runs on NVIDIA's CUDA software. So it's going to be very hard for people to jump ships and go to AMD where they can't utilize the CUDA software. Number two, history. History is its biggest enemy. History is full of companies that are the second best but never turn an adequate return to their shareholders. For example, 5 years ago, if you invested in Lyft over Uber thinking that Lyft will be the next big thing, you lost money. If you invested in Samsung over Apple, you lost money. But I will say this, if you do have a catalyst that differentiates this company from NVIDIA, I think you should jump in based off of this historical facts. But if your thesis is AI, you gotta find a new angle to look at this to justify your purchase. AI chips isn't good enough. That's it for my analysis. If you enjoyed this video, please hit that like button, please subscribe, and make sure you share it to as many people as you can. And if you're interested in supporting me, check out my Patreon and a few links at the description below. With that being said, I'll catch you guys in the next one. Peace.